After several down weeks, finally, we got an up week. So hi, everyone, and welcome back. We're going to summarize the week in the stock market. We're going to talk about all the news. We're going to look at how positioning is set up for the next few weeks. We're going to talk about the week ahead. And of course, we're going to start, as usual, with welcoming you. The word didn't fit in my mouth. Welcoming you to our channel. Hello, I'm Micha Stocks, and on this channel we talk about the week. We usually summarize the week on our weekly summary. Everything and anything that you see is not financial advice. It's just for entertainment purposes only. Yes, this is the channel. You probably know that. Otherwise, you wouldn't be here. So it would be amazing if you can subscribe to the channel and, of course, turn notifications on. Let's dive in. This is how the markets ended the week. You can see the Nasdaq up only 0.25, but it's not just only. It's only with bold letters because after 4 down weeks, finally we got an up week. So Nasdaq up 0.25, Russell, represented by the ETF called IWM, 0.4, S&P up 0.5%, and the Dow Jones up 1.2%. Yes, the Dow Jones, your grandfather's average beats yours. This is how the indices themselves look like. From the beginning of the year, the best indice that is performing is the XLE Energy, up another 3% for the week. After that, the financials up almost 2%. Then healthcare up 1.15%. And we can see that we're actually a spread between green and red. Not everything is green, which is good. It means that the breadth is opening up. And that is a good sign that we might have hit the bottom probably last week around Monday, Thursday, depending on the stocks themselves. When we look at the crypto market, nothing to call home about. Bitcoin, hunch on the week, and Ethereum up 2.5%. And here comes commodities. Crude oil up 1.4%. Gold and silver between 1% and minus 1%. And you can see natural gas cooling off a bit, minus 4%. We're entering the warmer seasons, which usually is puts downward pressure on natural gas. And Magnificent 7 with Broadcom. I need to find a new acronym for that. Or I'll let someone else find the acronym for that. 8 of the biggest stocks in the market. Apple up 2.24 for the week. Microsoft up 0.7, and all the rest red, which is amazing. Yes, I know you probably are invested in the Magnificent 7. And yes, you probably heard that they're between 25 to 35% of the major averages, whether it's the S&P or the Nasdaq. But this is good. It's good not because they're down. They're down, you're losing money. I understand that. Just remember, you're not losing until you sell. So it's not really that complicated. But the fact that there's participation by more and more stocks is amazing because these are only 7. When they start going up, all the rest will suck all the air out of all the rest. You want all the rest. You want the breath. You want more participation, and this is good. Now, look at something very interesting that happened Friday, around 10 to 20 minutes from before ending the market, before closing bell. Look at this. You see all the money running inside. We're going to talk about that in a second. After everyone closed their options, it was quadruple witching. Everyone closed their options and futures and opened new hedges for the months ahead. We got that. And that is, of course, a very good sign, which brings us directly into the news of the week. And I'm not going to start with that. That's probably the second or third thing I'm going to talk about. I'm going to start with Jensen called that the Super Bowl of AI. The Super Bowl of AI. I had the pleasure of spending 4 days, 4 days at San Jose with Jensen and the Nvidia team. And it was an amazing GTC with a lot of knowledge, a lot of excitement, and a lot of people. Around 25,000 different people came in and, of course, were there. A lot of information, a lot of demand. Now the market needs to digest everything that they saw there, whether it was good, whether it was bad, whether it was too much, whether it was not enough. A lot of digestion needs to happen. And if you don't believe that I've met Jensen, here, this is me, half of me, and this is Jensen. Yeah, I even signed my badge. I have the badge signed. Probably in a few years I can sell it on eBay for millions of dollars. So, yeah, actually, he wanted the selfie. I was just there. It was a big surprise. Okay, Fed decision. We had a Fed decision on Wednesday, and this decision was clear. We are not lowering rates. What we are doing is we're stopping the quantitative tightening, which means that what is the opposite of tightening? Exactly. And we expect 2 rate cuts during the year. That, of course, was interpreted by the market as dovish. And the market loved that message because the market has a tendency to go up. The bearishness that exists right now does not stand behind any fact, although I'm going to show you something that might be a bit scary. I won't say that, but the market interpreted as a dovish Fed, maybe even a Fed put. Now let's talk about the bullish side. CTAs, according to Goldman Sachs, are positioned in a way, I'll call it in a very bad way, to U.S. equities and U.S. stocks, which means that for the beginning of the year, most of them took money out, and we saw that last week on our weekly summary. They positioned themselves on European stocks, German stocks, Chinese stocks, everything but not U.S. equities. And that's why we saw a 10% correction on the S&P, a bit more on the Nasdaq, around 12 to 13%. Guess what? Now, with tariffs being decided around on April 2nd, there's nothing not to be bullish about or actually bearish about. And now they're underpositioned. And when they're underpositioned, there's around $70 billion worth of money that needs to buy U.S. equities. Goldman Sachs ran all the scenarios, whether it's a flat tape, up tape, down tape, on the next week and next month. All of them came out that CTAs, which are commodity traders, need to buy stocks, U.S. stocks. Bullish? Of course bullish. Doesn't mean that's going to happen. Going back to the bearishness, look at the AAII, the American Association of Individual Investors, came again this week on Wednesday with another 58%. You know that this is the first time in history that we got 4 consecutive weeks over 55%. We are only 10%, actually even less, down from all-time high in the S&P. Everyone is bearish because their psychology is playing tricks. Now, it doesn't matter what I think about tariffs if I'm pro or against. And of course, when you hear that, you can just say, oh, okay, you probably support this candidate or that candidate or this president. It's not even that. I would be okay with this 58% if we were down 25%. We're down less than 10%. What's the bearishness about? Why? Because there's going to be tariff? Okay, so there's going to be tariff. We're going to talk about that in a second. To take that even to the next level, look at the hedge funds' net exposure to the Magnificent Seven. They're at 2-year lows. If they're at 2-year lows, they believe that the Magnificent Seven are not at least going to provide them at least the benchmark of the S&P 500. Really? I was there at Nvidia GTC. Really? I don't think that is going to happen. Tesla, we're going to talk about. Tesla in a second is going to introduce the cheaper car, FSD, all these things. I'm not even talking about Apple, that so bearish that there's no more bearishness there and more. Now, I might be hallucinating, and maybe the market would fall from here, but the data doesn't support the bearishness. That is, of course, why we love the stock market, because short-term investors lose their focus instead of going and zooming out to the long-term. Long-term, there's nothing to be afraid of, at least now. We're going to talk about that at the end. Donald Trump on Friday awarded, it's tens of billions, but it's actually a lot more, a contract to Boeing to basically start manufacturing the 6th generation of the fighter plane called F-47. Why am I saying it's not just tens of billions of dollars? It's a lot more, because after saying that, of course, a lot of countries and air forces will want to have the same thing. And whether he meant it or not, he mentioned that for the last 5 years, the plane has already been among us, but we haven't seen it. Maybe those are the drones in New Jersey that no one knows where they came from. Maybe it's the F-47s. UAE is going to invest $1.4 trillion in the US after they met Trump. Bullish? Yes, of course. Where's that money going to come to? Tencent is going to launch the Hunyuan T1. It's their DeepSeek style reasoning model. The reasoning models will require a lot more GPUs, a lot more tokens that need to be produced through those GPUs. And that is, of course, you know who sells those GPUs, right? Beth Kindig from IO Fund can tell you. H20s, Nvidia. H20s are the approved version to sell into China, approved by the US government, of course. And of course, they will require a lot of these H20 GPUs are going to integrate them to a DeepSeek, to integrate them into WeChat and other AI platforms in China. Bullish for Nvidia, for Baba, and for Baidu. United Airlines is aligning itself for other aircrafts that are saying government has dropped related travel. Everyone that worked in tech in the past or other companies as well knows that part of reducing cost is eliminating travel. This is the story of the week. If you meet a bear and you want to tell him that the economy is on the verge of collapsing, this is the announcement you want to share with that bear. The announcement goes this way. DoorDash. We know what DoorDash does, right? Deliveries for food. Let's say Starbucks. Let's say Chipotle. Partners with Klarna, which offers the US customers even more convenience with flexible payments, meaning buy now, pay later. Some of the bears call that buy now, pay never. Okay. So let's say I ordered a venti macchiato, something. Can I split it into 4 flexible payments? Why would someone do that? Now, when you meet a bear, they would say, you see, the person doesn't even have the 5, 6, whatever price would be for the grande macchiato. I think that it's mainly for Klarna's IPO to have more and more logos saying we're working with them, and maybe even an aspiration for DoorDash to sell higher priced items through Klarna. Would I see someone ordering Chipotle and using flexible payments? I don't know. But maybe the economy is on the verge of collapse, because when you look at delinquencies, those are rising. So there are signs this way or that way. The market priced some of it in. I can't say that the market is pricing in a collapse, but we were down 10% up until a week ago. So you can't say that it wasn't priced in. While I was waiting in the lounge, flying back from GTC, I get a notification saying Tesla All Hands is going to be broadcasted live on Twitter or X. I was surprised. I'm like, who live streams an internal event? After Dan Ives from Wedbush said that Elon Musk needs to take back control of what's going on in Tesla, not because Tesla is out of control, just because it's very, very, very important time in Tesla's history or future. 2025, with the release of a cheaper car, FSD, humanoid robots, all these things are at the forefront of their growth. So Elon calls a swift all-hands meeting covering where the company is, where it's going, and everything was broadcasted live, both on YouTube and on X. You're more than welcome to watch that. The same day, on Thursday, earlier, Jensen Huang, Nvidia's CEO, held a symposium, a 2.5-hour, let's call it a conference, with the leading quantum CEOs, and also Amazon and Azure were there to talk about quantum. I came out with several outcomes. One is that there is such a thing called quantum computing. That's not the outcome that I didn't know before, but never mind. The second is, I don't see it happening in the next few years. The third is that there's so many different technologies under the umbrella called quantum that as an investor, your ability to catch the right trend is almost impossible. And this is not financial advice, but what I would say is one of the two. Or invest in an ETF that follows, and then you'll get the exposure if you want that. Second option is bet on all of them. Just spray and pray. Put some money on all of the companies, all of the publicly traded, and hope that one of them will 1,000% X itself, and then you'll enjoy that bet. But it's a bet that you can come out of the casino losing all your money. It's not more than that. Lyft plans to offer driverless vehicles as soon as this summer. It's going to be very interesting. We don't know yet with whose technology. Is it going to be Waymo? Is it going to be Tesla? Is it going to be maybe Mobileye? That's going to be very, very interesting to see. Tesla plans to introduce a battery innovation for Cybertrucks. Meta plans to roll out its AI chatbot across Europe. Eli Lilly launches Monjaro in India, surpassing Novo Nordisk, being faster than them to debut that market. Shopify will probably see inflows of funds buying their stock, mainly because they moved from the New York Stock Exchange to the Nasdaq. You can be in the S&P 500, but you cannot be in the queues if you're not part of the New York Stock Exchange. That, of course, when you're moving to the Nasdaq, you'll be able to get more flows that way. Taiwan Semiboards dismisses Intel Foundry takeover rumors, and also Jensen on the Nvidia side says we weren't part of any consortium to talk about Intel. U.S. Treasury Secretary Bassett met All-In podcast and talked about the three things, or three-part legged stool. Well, a three-legged stool is not that stable, but never mind. Let's go ahead with that example. He's going to deleverage the government. He's going to deregulate so the private sector can safely relever, meaning that he's going to take away things that the government is doing and turning it to the private sector and reorder international trading systems. Mainly, that's a very, very laundried word for saying tariffs. A day later, Howard Lutnick was interviewed with the same group of people. Why am I mentioning that? I started by saying Trump didn't tweet anything dramatic this week. Bassett and Lutnick came all out, or all in this case, to kind of calm things down, calm investors. So they can keep saying that they don't care about the market short term. They can keep saying that they want to look strategically years ahead. But look what they did during the week. Trump didn't really tweet a lot. They came out and tried to explain what they're doing in a way that everyone can understand. I think it looks more like a Trump put than anything else. So we have a Fed put, we have a Trump put. Put it all together, you know what you have. You have a market that wants to go up. Sonali Basak from Bloomberg tells us that there's a plan to cut 2,000 jobs at Morgan Stanley. That's a hell of a cut. Tesla received its first approval in a series of permits for robotaxi in California. And Google acquires Wiz, an Israeli-based company, for $32 billion. $32 billion, the biggest Google acquisition ever. And the reason for that, and you can see here Asaf Rappaport is the CEO and the founder of Wiz, which sold to Microsoft in his previous life, another startup that he held, and he's only 32, if I'm not mistaken, on his age. They're providing the cyber layer for all the cloud providers, all the hyperscalers and others. Most of the Fortune 100 are working with them. And probably one of the interesting reasons for Google to acquire them is to catch up with all the other hyperscalers on the cloud offering, mainly for businesses. NIO and CATL, the company that produces batteries, forge an alliance to revolutionize the battery swapping network. NIO is the only company that I know that you can put your car in this kind of stationary garage, and the battery is being swapped after 5 minutes, and you get a fully charged battery, mainly relevant to super urban and dense population. Costco talked to their suppliers in China saying that they have to cut prices, otherwise there will be a problem selling them. Amazon is planning to reduce 14,000 of managerial positions. Why do they have 14,000 managers from the get-go? I'm just kidding. Amazon is a huge company, but still 14,000 is a lot. BYD with a huge landmark or mine saying the following. We are going to let cars, or we're going to have the technology to charge for 5 minutes and get 400 kilometers, which is around 200 and something miles, out of a car. That is crazy. We'll see if that even exists. Klarna stole a Walmart from a firm. We talked about Klarna earlier. Robinhood launched the prediction markets. And actually, it's very funny because they launched it before everyone uploaded their brackets or chose their brackets. And why am I mentioning that? So you probably know that currently the likelihood of you having a perfect bracket is 0.6987%. Look at the numbers. They seem like they're kind of following one another. But you know what? Let's put the numbers aside. 0.698 7% likelihood that you or I have a perfect bracket. By the way, it's a good timing to say that if you have the perfect bracket, write down on here on the comments. Trump and Putin talked this week. No ceasefire. Actually, a day later, both Russia and Ukraine started firing at each other. So not even close to a ceasefire. Tesla halts Cybertruck and does a recall, a physical recall, because they have loose panels. PepsiCo, ticker PEP, bought the prebiotic soda brand called Poppy, which was introduced to everyone during Shark Tank. Congrats to the Shark Tank team, of course, to Poppy team and Shark Tank. Apple shipments for January went down 20%. Intel CEO tries to revolutionize, restart, all the words that are starting with re, to maybe try to lift up the company back to where it was in the past. And Tesla China launches a limited time trial for full self-driving. That is, of course, Tesla's way of collecting data without saying you're the guinea pig. That's it for the week. Let's talk about next week. Not the biggest companies in the world are reporting next week. We're actually at the end of remember, we're at the end of March. 2 weeks from now, we're going to get 3 weeks from now, we're going to get the banks. So we have like these 3 weeks of nothing special. We'll get Oklo, Sam Altman, one of the companies that Sam Altman is invested in, a small nuclear reactor company, or actually a company that wants to provide small nuclear reaction. That Oklo on Monday. We're going to hear from GameStop. Of course, McCormick on Tuesday, and then GameStop on Tuesday as well. Will we hear from GameStop that they bought Bitcoin? Would be interesting. Wednesday, we're going to hear from Dollar Tree, Chewy. Who else? Smaller companies, Petco. Thursday, we're going to hear from my favorite brand. Not Winnebago. I know you thought of Winnebago. No, Lululemon. We're going to talk about Lululemon. And we're going to hear from Lululemon. We're going to hear, do they see the consumer slowing down? It's a different kind of consumer. I believe it's more on the mid and the high end of consumer, but who knows? Everyone can yoga these days. And actually, I don't yoga, but I still wear only Lululemon pants. So maybe I should start yoga. Talking about the macro environment, we only get PCE on Friday. Beside that, a lot of Fed talk this week. Their blackout is over. They can say whatever they want. We're going to hear from the ones that said we need to increase rate, take down rate. Everyone's going to talk this week. And that brings us to the S&P 500, which is represented by a Japanese candlestick on TradingView chart. And this is what we see. After 4 weeks of down weeks, we finally got a candle that might give us a bit of optimism, a bit of hope. What does this mean? First of all, it's green, so it's an up week. Second of all, the way that candle is structured, more often than not, shows that there might be a trend reversal. It doesn't mean you should go all in and bullish. And remember, this is not financial advice. What it does mean that finally we got a green week. Now let's go down to a daily representation of the market. What you see right now is the market corrected around 10%. This is the correction that we got. By the way, by average, it happens every 1.1, or a 10% correction happens 1.1 times a year. So we got 10.46. Then we bounced on the 5,500. And we got resistance around 5,700. Now, when we pull up the 200-day moving average, and the 200-day moving average, and that's the moving average you should pull up and see, we're currently under the 200-day moving average, which means that we should still think that we have downward pressure. But assuming we surpass 57.49, it means that we have just corrected that and started going up with a major kind of a price to fall around 57.70. If we surpass that, then no doubt we are correcting back up. So 55, 57.70, those are kind of the prices you should look at the S&P 500. A lot of stocks already seem to have bottomed around Monday last week, not this week, last week. Some on Thursday. The S&P seems like it bottomed on Thursday, and we will see this week. Do we break down 5,500, which means that it wasn't a bottom? Or do we surpass the resistance that we have at 5,700 and we will go up? That's everything I had for you this week. We're going to meet again next week. Same time, same place. If you like, you can smash that like button, and that will help the algorithm, at least People say that it helps the algorithm. I believe that people watching helps the algorithm, but you never know. Till next time, Micha Stock saying bye-bye.